I'm Yatin Mota and you are watching the closing bell with me on this Money Control live stream. Obviously, the week gone by and the last one or two trading session in particular have been quite volatile for the Indian stock markets. Probably the Indian stock markets are in a bear grip for the shorter term because of the geopolitical tensions and fund flows shifting to China. Obviously, we'll detail up the entire week for you. But if you talk about today's market action, Nifty lost over 220 points in trade today. Obviously, from the day's high, there was almost an intraday 500 point decline that we saw from the day's high on the Nifty. And if you look at the Sensex also, we have seen almost 700 points kind of a decline coming in. The markets continue to remain volatile. Crude oil as well as commodities have rallied given the geopolitical tensions. That doesn't augur well for Indian companies. And if you look at the overall tensions between Iran and Israel, that is clearly weighing on the global investor sentiment, especially in the Indian subcontinent. When it comes to the oil marketing companies, they also saw a correction in trade, given the fact that the crude oil prices have started moving from $70 a barrel to almost a level of 77. PSU banks, IT stocks, however, rose in trade. IT stocks will report their numbers starting next week. And we have the PSU banks wherein the deposit data was quite good, because of which SBI as well as Bank of Baroda held up in trade. Apart from that, media, cement, real estate were the clear laggards in trade today. Auto stocks also started correcting in trade today. So yes, overall, barring one or two sectors, most of the sectoral indices ended in the red. If you look at the markets this week, we lost almost 4.5% on Nifty as well as Sensex. The mid cap and the small cap index were also down anywhere between 3% to 4%, and small caps losing by nearly 2.5% in terms of the overall price action. Sectorally, real estate and auto continue to be the top laggards this week. Both of the indices lost anywhere between 7 to 8%. FMCG, PSU, enterprises, private banks also lost nearly 5% on an average. So it has been an ugly week for the Indian equities. From the record levels, we have seen a sharp correction coming in. However, the Nifty continues to get a big support, at the 24,800 level. However, today we settled very close to that 25,000 mark that you can see on your screens. Obviously, today we are joined by a guest, Milan Vaishnav, founder and technical analyst, ChartWizard FZE, joins us live on today's show. Milan, welcome to the show. Good evening. When you talk about the markets, we have a clear, pressure point on the Nifty as well as the Sensex. What are your views right now on the index? Do you think that volatility will continue, and probably from here on 200-300 points downside can be expected early next week?
Hi, a very good afternoon. The thing is that there are more than one things that I'm looking at right now. Now, since the markets are down, we have had a very weak week where we saw the key indices declining by almost 4.5%. We have reasons to write below that data point that we have money flowing out of India to China. We have geopolitical tensions to deal with. We have some reactions that have come in with regard to SEBI affecting changes in the F&O trading environment, all said and done. But these are the things that we know and we can see and write about them. But the thing that from a technical perspective also, the major reason is that markets had risen way ahead of their curve. Just a couple of days back, we had Nifty, which was trading around 11% higher than the 50-week moving average. So this kind of deviation from the mean is also not good. So if you look at the markets in isolation, without considering the external factors, even then you will see that what the markets have done, they have just retraced from their over deviated conditions on the chart. So that being said, now if we talk about immediate short term, markets have defended the 50 DMA at close, which is at around 25,000 odd levels. And on a week-on-week basis, even if the weakness continues, even then we are staring at a strong support around 24,500, which happens to be the 20-week moving average. So by and large, I believe that some kind of technical rebound might be in the offing, even if we continue with the overall weak sentiment.
Okay, that's an optimistic view coming in from Milan Vaishnav. Obviously 24,800, that is one level from which a lot of market participants are expecting a bounce. But Milan, index heavyweights like HDFC Bank, Reliance, all of them were down in trade from the day's high. If you look at the stock, correction, that has been more than 2-3%. So with heavyweights under pressure, what is the overall view on these two stocks in particular, Reliance and HDFC Bank?
I see a buying opportunity in both of them, but the thing is that both remain structurally different than each other when looked from a technical perspective. HDFC Bank
Okay.
is much stronger on the charts. All it did was to make a classical double top resistance at 1780, 1790 levels, and from where it has retraced and tested the 50-week MS. So one can certainly use this decline to enter into the stock or accumulate the stock, because any move above 1780 will lead to a multi-year structural breakout in SDFC. So SDFC is far better placed from a technical perspective than Reliance. Reliance, on the other hand, only thing that warrants accumulation in the stock is that it's getting mildly oversold now, and some kind of a technical rebound may be in the offing. So both of the stocks can be accumulated at current levels. From a technical perspective, HDFC Bank looks much strongly placed than Reliance. But overall, because of the entire energy space seeing an improvement in the relative momentum, well, Reliance can also benefit out of that.
Okay, so both HDFC Bank and Reliance attractive buys at lower levels. But talking about HDFC Bank in particular, and this is one stock we'll focus on. HDFC came out with their September quarter shareholding, and to most expectations, the FII headroom has almost been nearly 25%. So the adjustment factor, according to MSCI, increases from 75% to 100%, and that leads to a weightage hike of nearly 1.6%. Which means that in the upcoming November review, HDFC Bank can see a inflow of nearly $1.5 billion or 12,000 crores to be in specific. Yes, the quarterly update was also good. If you look at the deposit growth, that was almost 5% higher on a sequential basis, and a 15% deposit growth was seen on a year-on-year basis. So the data points for HDFC Bank were good. Obviously, MSCI is something which will get decided in the month of November. But yes, the market setup for HDFC Bank looks good. One review already had a big buying, and now the November review also could see some good FI inflows for HDFC Bank. But moving from private banks to PSU banks, today we have Bank of Baroda, which came out with a very strong set of deposit numbers as well as advance growth, much better than the street expectations. On the PSU front, both SBI as well as Bank of Baroda showed strength in the markets. Milan, taking your view here on Bank of Baroda, technically in the PSU banking space, do you think Bank of Baroda and SBI could rally from here on, or are at a good point wherein we could make some good money momentum wise?
Yes, I feel so. The reason is that talking about Bank of Baroda first, Bank of Baroda saw a corrective retracement from 290 odd levels, and it came down right up to 240 to 35 levels. Now the thing is that over the past couple of weeks, the stock has flattened out. During recent weakness in the markets, it has stayed very resilient, and it's showing a strong improvement in its relative momentum against the broader market. So there are two things that I see about Bank of Baroda. One is that it has attempted to keep to place a base for itself around these levels between 240 and 250 odd levels. And a confirmation of this would come once the stock moves above 257, 258 levels. Once it's above that point, we will see some more stronger momentum on Bank of Baroda, but we will need to see that it goes above 258.
Absolutely, and that is the technical view coming in. For a fundamental side, as I was mentioning, Citi has come out with a report on Bank of Baroda. They have a buy rating with a target of 300. If you look at the quarterly numbers, obviously there was a strong growth in the deposit franchise. Global advances growth was much better than expectations according to Citi. Citi also believes that the core net interest margins will broadly remain stable despite the overall margins which get impacted by the overseas margins. Obviously, the credit cost is likely to settle close to 50-60 basis points, and support from better recoveries should further boost the overall profit and earnings for Bank of Baroda. So that's the view coming in from Citi. We spoke with Milan about HDFC Bank, Reliance, SBI and Bank of Baroda, and the overall positioning of the market looks like that we are at support levels. Milan, before we let you go, your stock ideas or sectors that you like, any particular recommendations or sectoral ideas that you would like to share?
Yes, I would be taking a bit of a defensive stance here. From the stock point of view, I would be looking at Alembic Pharma. I would be looking at entering Alembic Pharma above 1240 levels. Expect around 1310 on the stock. One can keep 1150 as a protective stock on Alembic Pharma. Another thing I'm looking at is Samvardhana Motherson. This is the stock which has been very resilient of late, and it's like the leading quadrant of the relative rotation graph. One can enter Samvardhana Motherson above 201, expect 217 to 219 on the stock. A protective stock can be placed below 185.
Okay, Milan, we leave it at that. Thank you so much for speaking to Money Control and taking out the time on a short notice. So that's the view coming in from Milan Vaishnav. He is the technical analyst and founder at ChartWizard. Clearly, if you look at the Indian stock markets, they continue to remain volatile. The geopolitical tensions between Iran and Israel have taken center stage. What happens over the weekend, nobody knows. Obviously, if nothing happens, market would cheer that. But yes, that shorter term probably could remain volatile. Take care of yourself, enjoy the weekend and stay tuned to moneycontrol.com for all your business news and updates. Thank you so much for watching.